Who's the newest addition to the PSEi index? The peso made a big comeback. More second quarter earnings, the latest on inflation, GDP, e-gaming, and much more. It's time for another week, another opportunity. Hi everyone, and welcome to Intelligent Investing with me, April Tan. The Philippine Stock Exchange Index rose 0.5% to close at 6,339.38, supported by a strong rebound in the peso and growing optimism for lower interest rates. Gainers outnumbered losers 138 to 129, and while foreign investors were still net sellers, the amount was just 8.2 million pesos, sharply lower than the previous week. The peso jumped 1.8% to close at 57.1 after briefly weakening past 58 2 weeks ago. This turnaround was fueled by a disappointing U.S. jobs report, which sent the U.S. dollar index down 1%. Average jobs growth in the U.S. over the last 3 months has slowed to just 35,000 from 123,000 a year ago. This raised hopes that the Fed could cut rates in September, easing concerns that an August BSP rate cut would further squeeze the peso-dollar rate gap. July inflation slowed to just 0.9% versus the expected 1.1%. This is the lowest since September 2019, driven by falling food prices and softer housing costs. This strengthens the case for a BSP rate cut this month.
What happens when the BSP issues a rate cut?
The expectation, of course, is for borrowing rates to go down. And that would be good for businesses because, of course, they can borrow at a lower rate, and that is expected to spur more borrowings, more investments, and of course, that would create more jobs.
Is it always a good thing?
I think it would be negative if, let's say, inflation is really picking up, but the BSP decides to cut rates. Ironically, that would send interest rates in the secondary market going up. I think that happened in the UK. I don't remember if it's 23. Diba, Liz Truss, I think at that point in time, was forced to resign because the implication was she was gonna make it, easier for businesses to borrow money. In other words, that was her objective. But instead of seeing interest rates go down, interest rates went up, and there could have been a crisis, which is why she was replaced right away. However, starting September 1, President Marcos will suspend rice imports for 60 days to help local farmers. This move could prevent further price declines and limit the decline in inflation going forward. On growth, the economy expanded 5.5% in the second quarter, slightly above expectations. Household spending grew 5.5% while government spending slowed due to the election-related ban on public works. Imports cooled sharply, turning net exports into a growth contributor. The continuous recovery of consumer spending growth is actually good. We saw an acceleration in the second quarter. Let's link it back to BSP Governor Eli Remolona's decision. Why does he even have to cut rates anyway if the economy is doing so well? It's more like if you look at GDP on a longer term perspective, I think consumer spending growth has had its better days where it grew faster than 6%. In fact, di ba nga, the government is targeting GDP growth to be above 6%. But here, you saw a recovery, but it's less than 6%. So in other words, we're improving, but not as fast as ideally we should. Now, the moment a lot of us have been waiting for. Who's the newest member of the index and who got removed? I think everybody kind of knew that Bloomberry would be removed. The problem is, who will be added? Will it be RCR or Plus? Technically speaking, if you use the criteria of the PSE, Plus is the rightful candidate. The problem is the PSE has this rule where if your share price is very volatile, it could decide against it, which is why people were thinking, so if they're not gonna put Plus in, they will be putting RCR in. The PSE could have announced the newest addition as early as 2 weeks ago, but it did not.
Do you have a guess why it took so long?
Well, maybe they were also considering, whether or not to follow the rules or to, use the exception to the rule. In a way, you can understand why they may consider not adding Plus because of the steep volatility of the stock. I mean, if it's part of the index, your index will also be very volatile. So maybe that's why they were considering, should we add this or not,
So do you think, given that it's volatile, do you think this is good for the index and the stock market?
maybe it's better na lang that they add because at least it's very objective. You have the rules and then you followed it rather than using a subjective rule, increase volatility. But how do you measure like what level of volatility is too volatile for you? Because of course that could create more subjectivity in the future. Like what if there's another stock that, could be added, but then you could always say, oh, it's volatile. They were very objective. Earnings season was busy with 18 companies reporting mixed results. Let's start with the winners. Cebu Air profits jumped 262%. This was due to higher passenger and cargo revenues, a stronger peso, and lower fuel costs. They'll also pay all accumulated cash dividends on their convertible preferred shares, which they issued during the pandemic. The dividends will be paid in October. Although this just benefits preferred shareholders, common shareholders can still share in the excitement, as this brings Cebu Pacific one step closer to paying them all cash dividends. ICTSI was another winner with a 16% profit growth driven by higher volumes across all regions, better yields in Asia, higher operating margins, and lower financing costs. Management also expects its Rio Terminal and Batam Port acquisitions to start contributing in Q3, and it's eyeing more deals in East Africa, Latin America, and the Middle East. Apart from those two, Manila Water delivered a 29.2% earnings jump largely due to higher water rates and more efficient operations. And RLC beat expectations on strong ready-for-occupancy unit sales. Now on to the property sector. Property companies delivered positive earnings growth as their malls, office leasing, and hotels businesses continued to perform well. RLC delivered better than expected earnings largely due to the strong demand for its ready-for-occupancy residential units. Ayala Land also attributed the improvement to strong demand for RFO units, while SMPH said it benefited from strong demand for newly launched projects in the provincial areas. But stocks surged higher as borrowing costs and signs of a residential market bottom lifted investor sentiment. In other words, we're probably in rock bottom, so it's likely to recover, leading Ayala Land to go up 8.5%, Megaworld 4.6%, while Robinsons Land and SM Prime each added 3%.
Given that there was a lot of news about an oversupply in condos and properties, would you recommend that the property sector be a good industry to invest in right now?
It's quite tricky, okay. As they say, diba, parang you also have to consider what is being priced in. And diba, Warren Buffett has said, like, I just look for a low bar that I can step over. The property sector is a perfect example. The bar has been set very low. And why do we say that? Like, a lot of these property companies, for example, are trading at valuations, single-digit PEs. In fact, I think some of them are trading at 3 times PE, which is ridiculously cheap. So, let's say, post-global financial crisis, ano yan, teens. And then Ayala Land, before, during the 1990s, 30 times PE. We have this concept of book value, which means if I buy a property and I put it in my book, it's book value. Let's say I bought a property for ₱1,000,000. I put it in my books. That is the book value, di ba? But based on how much the stocks are being priced right now, they're even below that book value. And can you imagine these property companies have bought these properties so many years ago? And diba, parang wala namang ganung price na eh. So they're just that cheap because of the so many problems that, these property companies are facing. For the consumer sector, Pure Gold exceeded expectations with strong sales, which accelerated in the second quarter. Meanwhile, food manufacturers took a hit. This was brought about by concerns that their margins would take a hit from higher input costs. The silver lining, most of these commodity prices have already peaked, which could support a second-half margin recovery.
Is the consumer sector in a good or bad place right now?
It's actually mixed because they are good in terms of sales. You can see everybody or almost all consumer companies saw their revenue growth accelerate in the second quarter. However, you did see some food manufacturers that were hit by the high prices of some commodities, which was in a way kind of surprising because the first quarter should have been when the margins were hit. But then again, they still had those expensive inventories, I guess, which they had to book in the second quarter. And the hit was quite substantial. So as an analyst, we looked at what happened to the prices because It could have been the worst already, second quarter. The good news is you see palm oil prices, cocoa, and even coffee prices going down already. The problem is coconut oil prices are still going up. If a company is focused on or uses coconut oil heavily, then you're not sure if the margins have already bottomed. Other important movements to note are Globe's, Meralco's, and ASEN's. Globe's earnings slipped 0.3% as mobile and broadband revenues fell, though GCash earnings grew over 70%. This is still at risk though, as the ongoing e-gaming regulation saga is yet to be decided and finalized. Now, Meralco's power generation arm MGen plans to double its capacity by 2030, with projects spanning solar, coal, gas, and hydrogen-ready plants. This will be interesting as successful execution will help drive faster earnings growth as the company's power distribution business is already mature. Most of its new plants are also not yet factored into analyst forecasts, so this could potentially drive a re-rating of the stock. Lastly, ASEN, which was the darling stock back in the pandemic, just posted a 1.2 billion peso loss. This came from asset impairments in Vietnam, outages in northern Philippines due to Typhoon Marcel last year, and weaker Western prices. Because of its poor earnings, the company is delaying its planned stock rights offering, which was originally scheduled for the third quarter. It is also scaling back on its 2030 capacity target from 20 gigawatts to 15 gigawatts. So, as mentioned earlier, it was the darling stock during the pandemic because it was positioning itself as a pure renewable energy play. It had this aggressive expansion plan in place. And of course, it's an Ayala company. So, all of that put into play. So the share price just kept on going up and up and up. I guess the problem is, okay, now that they have the plan in place and then they were able to raise the capital supposed to be for the first few plants. In contrast with property stocks that we talked about where the bar is really low. The bar for ASEN was really high because people had great expectations. The problem is, of course, now that they were executing on these plans, I guess a lot of things went wrong. Again, based on your computations. Mali. That's it for this week's episode of Intelligent Investing. The peso is stabilizing, property stocks are perking up, and earnings season is revealing clear winners and losers. Like, subscribe, and hit the bell so you're first to know what's moving the market. Another week is another opportunity. I'm April Tan. Thanks for watching and see you again next week.